Good evening, everybody. This is James Romelli from Alpha Shark Trading, here to talk a little bit more about our tax loss selling strategy for the end of the year that is going to set up on December 18th. Now, we've talked a lot in this week's video series about how the trade actually works, why it works, why it's been so consistent, about the performance it's had over the past 40 years, and why we like it so much. But what we haven't talked about is how we at Alpha Shark approach this trade a little bit differently than some of the other kind of more traditional approaches would go about doing this. Now, traditionally, to do this trade, all I'd be looking to do is buying every single stock that is making a new 52-week low on the last Friday of December before Christmas, and then holding it through till February. But we like to go about this a little bit differently. We add a few more filters to filter out some of the less opportune stocks and focus in on ones that we think are going to perform the best. But what we really are going to do differently about it this year is we're going to use options wherever we can to lower the overall risk of the positions in the portfolio. So I have an example here of a trade. This is from last year. So this was one of the stocks that set up well for this trade, and it passed all of our filters, and we bought it on this day here, on the 19th, which is when the trade set up last year. This year it'll set up on the 18th. But the next day, the very next day, the stock gapped lower, and it slammed lower. And while this might look like an orderly sell-off here, it really wasn't. There was no chance to get filled at our stop loss order anywhere through this move lower, so we ended up with a much worse price than what we thought we could lose in this position. Now, it still didn't bring us into negative territory on the portfolio. By the end of the trade, we still had a ROI in the neighborhood of 25%, but what it did do was drag on that return right off of the bat. And it also got us out of the trade with no chance of participating in any rally back. So what we're going to do this year is look for opportunities where we could use puts or short put spreads or long call spreads to take advantage of the idea that these stocks are going to be strong through the first 2 months of the year, but not have to worry about big gaps lower like this. Because these companies are on 52-week lows when we put the trades on, they generally are not very good stocks. So gaps like this can happen. So we're going to cut down on that by using options. So if you're interested in learning more about this portfolio and how we're going to build it using stock and option spreads, please check out the workshop and attend on the 18th of December when we put all these trades on live in front of you guys and then give you the updates as we go through. So thank you guys very much. Everyone have a fantastic evening, and as always, happy trading.